Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon, good evening, and welcome to Traders Workshop for October 17th. I'll be your host, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to bring in our NinjaTrader Ecosystem partners so that they can share with you what their expertise is. And hopefully you can take something out of it and apply it to your trading. And this week, it's no different. This week, we're very happy to have back on the show a regular guest on Traders Workshop, co-founder of Gorilla Futures, Patrick Mullen. It's great to have him back. Patrick, welcome back to the show.
Hey, Tom, it's good to be back. How you doing today?
I'm doing really well. It's been an interesting day for sure, and but everything's great here. How about you?
It has. It's been a real interesting day. Once we get started, I'll show you a few trades from this morning. But yeah, today's been a weird day in terms of news volume. You've got some, the earnings and stuff beginning. I believe what do we have? The Goldman call earlier today, Bank of America, a few things like that. So today's a real weird day. I'll be 100% honest. I didn't think we were going to see this rally that we've seen here the last really 2 hours or so. But interesting day to say the least.
Yeah, for sure. And, it seems like this is one of those days where information is coming at you from all sides. Yeah. In hockey terms, we call that skating backwards, right? We're playing defense. But just for people who haven't seen you before, Patrick, just explain a little bit about your experience, Gorilla Futures, and, where are you located?
Yeah. So Gorilla Futures was created towards the end of 2019, pretty much beginning of 2020. So been around for about 3 years now. Offer education, indicators, tons of free stuff on our YouTube channel, our website, gorillafutures.com. Me personally, been trading for 11 years now. Started out with penny stocks and then Forex. Never the biggest fan of those. Ended up with futures mainly because I just want to trade one instrument. I'm a big fan of the ES. Every now and then I'll dabble in kind of our NQ, NASDAQ, or I used to trade crude. Really don't trade crude as much anymore. Just one of those personal preference things. Not that there's anything wrong with it. And yeah, like I said in the beginning, we can look at a few trades here before we get started this morning if we want to go down there. But I'm a big ES fan. Trade the MES too. I think it's a great platform, especially starting out, testing systems, testing new trades and stuff like that. I think the MES is great. I personally trade with more of kind of a price action style background. And then I mix in, lately I've been mixing in a lot of kind of Delta-based items. We did a webinar workshop here, I believe a month or two ago, where we talked about some of those items. But really, and then put things in a nutshell, I like to scalp. Lately, I've been trading a 30-second chart. I used to trade tick charts. I still use tick charts, but really price action mixed with some delta options, looking for those squeezes, is really kind of how I've been trading and how I plan on trading here moving forward.
Awesome. Thanks for that. And just to clarify a couple things, 30-second chart, you don't usually hear those a lot, only because it's just a frequency or a time period that isn't available in every platform. NinjaTrader has this ability to look at a bar made from 30 seconds worth of data, not minutes, not days, not weeks, but 30 seconds. So really cool thing. And especially that fits kind of your style, right? Yeah. Which is a shorter term trading. Also the MES that Patrick mentions, that's the micro E-mini. It's 1/10 the size of the E-mini S&P. So there's a little on a per contract, if you compare, it's 1/10 the risk. It's 1/10 the reward of one ES contract. So for new traders, it's a great place to start because you're kind of getting your feel around trading, and you're not risking as much. You can graduate to multiple contracts before you might decide to go to a bigger contract in the E-minis. So just want to lay that out for those of you who are new to the show. And by the way, if you have questions for Patrick, you can join the chat at ninjatrader.com/events, EVENTS. Put in a handle once you hit the big play button, and you can ask Patrick a question on what we're talking about here or anything else related to trading. So I just want to put that out there to start.
Yeah, and if there's anything we don't get to, you're more than welcome to shoot me an email, gorillafutures@gorillafutures.com, if you would like to, if we don't get to it today.
For sure.
So so today's topic, we're just going to be talking about developing a trading plan. So really my opinion on this is you kind of need to start, and we've talked about this before, you kind of need to start with a foundation. What do you want that trading plan to really kind of produce? Obviously, we want to produce winners, but what is really the goal here? So we're going to take some notes kind of as we go along with this. We're going to look at some charts. I'll use some of my trades from today as an example. I'll show you the good ones, and I'll show you a bad one that stings a little bit here. But let's just kind of dive in with that. So this is really going to be broken if you're taking notes. This is really going to be broken down into what I've got kind of three different categories or sections to say here. The first one is just really laying that foundation. And what I mean by laying the foundation is there's really four questions that one, when I'm talking with traders, I like to ask, and when I like to go back and kind of reevaluate my plans and things like that, or if I'm changing my trading plan, I like to go back and kind of reevaluate those. The first one is, what is your goal? It might sound a little obvious here, but the whole idea with this is we want to create this planner system like we're describing it to maybe an elementary school child or someone with that sort of comprehension of trading. So what is your goal? If we want to I'll use myself for an example. My goal when it comes to trading futures is, I want to be able to, one, do this full time. I want to mainly do this, in the morning. I like to trade between about 9:30, 11:30, 12, something like that. So I want my trading system to kind of complement that style, and that's what I want. That is my goal. So if I am, let's say, setting up a swing trade that's going to take 8 hours or so to work itself through, well, I'm only in front of the charts for 2 or 3 hours. So you start to get some of these conflicting interests here, and you're going to see as we kind of go down some of these checklists is that a lot of traders run into those kind of conflicting feelings or interests there. So one, what is your goal? What is your time frame? We just talked about that. My time frame is really kind of that 9:30, 11 to 11:30, 12 o'clock window. And then what is your style of trading? I kind of touched on that. For me, I am what you would call a scalper. So how I classify scalping is I want to be in and out of trades. If I can get in and out within a minute, that's what I like. In, out, hopefully risk off, rinse, repeat, wait for the other. Some people, maybe they want to average in, average out. There's no right or wrong way to do it. But where I see people running into issues is, maybe you're a scalper, but you saw someone on YouTube that's a swing trader and you're trying to force yourself to be a swing trader, when in reality, you're a scalper and you should focus on scalping. So, and that goes with, swing trading, intraday swing trading. Maybe you're a gap up, gap down type of trader. Maybe you're looking at order flow. Maybe you're looking at a dome. All of that style of trading is something I think that you should at least kind of tinker with before you really start trying to figure out what your plan is, because you don't know what you don't know, and you need to start to figure out what is that style of trading, what really resonates with me. And when I'm talking to traders, when we do our coaching, when we do our webinars and stuff like that, it's, don't just follow someone's results. Obviously, we're all here to make money, no guarantees, but we want to also do something that makes sense to us, because if it doesn't make sense, then you're going to struggle for a little bit, and then you're probably going to rinse and repeat, and you're going to go chase the next thing that's bright and shiny. So first of all, make make your trading something that really makes sense to you and something that, really resonates. So you might have to kind of, test a few things out, test the dome, test, swing trading charts, whatever it is, but test that out kind of before. And that is number 3 on kind of our 4 is, do you know everything about your style of trading? So once you have, excuse me, once you have a good idea of what you plan on trading or how you plan on trading, then is when it comes the education route. Whether that's price action, whether that's like a price action course or a YouTube video or whatever, you need to identify all that information, learn it, and then make it something that is really, like I said in the beginning, something that you can explain to someone with very little education, essentially an elementary school child, dumb it down, because if you can't dumb things down, then 9 times out of 10, you probably don't, really understand what you're talking about. So that right there, those were 4 things. I'll summarize them here real quick. Those are 4 things that I like to call laying the foundation. So number 1 is identify the goal, be specific with it. Hopefully you're writing all this stuff down. Hopefully you're journaling, whether it's kind of old school. I've gone back to an old school method. I just print out my sheets every day, and jot those down, whether it's something like that or spreadsheet, whatever it is. Jot your information down, make something that makes sense to you, find a style of trading that one really makes sense to you, and then lastly, learn everything about that before you really try to start trading it. Don't trade kind of half-cocked type of thing.
So, Patrick, just to talk about and expand on what is your goal, I think that's a great idea, and you can be as specific or as broad as you want, right? So, when I say that, I mean, part of the goal could be I want to make trading a full-time thing. I want it to be my primary source of income. Or it could be I just want to explore. I want to learn more about it and see where it goes, right? I want to test, put my foot in the water and see how the temperature is and see if this is for me, right? And as anything, goals can change. So if you find that you meet your goal, you might revise them. You might look at them again and say, in a year, I want to make a decision whether I take this further, or I kind of keep it where it is, or if I step it down a bit. But really, the goal isn't, like you said, just about I want to make X dollars or X currency, but per day, per week, per month. Yeah. It's really about becoming a trader, not just a source of income.
Yeah, you really kind of need to like re-engineer it almost. Yes, we want this outcome, but how do you get there? You don't just get there just focusing on the outcome. You need to get all those little things in line. Then hopefully that outcome is just a kind of a result of your hard work, your time, dedication, all whatever you want to call it. That outcome is really just the fruit of your labor type of thing. So that is, and I guess I should have said this in the beginning. I do apologize if there's a little bit of an echo from my end. There's a big space behind me now that we're working on, for the new Guerrilla Futures office. But anyways, that right there is really kind of section 1, laying the foundation. And it's something, just to kind of close this off, it's something that I think people should probably spend a lot more time on than they do. Everyone's always in a rush to get trading. The markets aren't going anywhere. And if the markets do go somewhere, we probably have a lot bigger problems than just the markets. These are trillions and trillions of dollars. They're not going to evaporate overnight type of thing. So take your time. And then the next step is what I like to call is, the phase of, really building this trading plan. This is when, you should have an idea of, I like to look at candlestick charts. I'm going to trade candlestick charts. I'm a scalper. I like price action. Those are the things that you should have a good idea of. And, you should have a decent amount of, education, understanding, know-how of how those things really work. So I have a few bullet points here off screen that we're going to go over. There's pretty much kind of five bullet points. Now, remember, we only have 45 minutes, so we're kind of trying to cram this down in there. There's details and stuff like that I think might be common sense details. You might need to spend a little more time, but we're trying to cram this all into this quick webinar here. So number 1 for me is stick to one signal. Why is it important, at least in my eyes, to stick to one signal? Well, you can only chase one chicken type of thing. And if you go back and you look at a chart or anything like that, we can show my screen here real quick. We can look at that if you want. Um, you know, Looking at that one signal, you'll probably start to realize, hey, that one signal pops up, 5, 6, 7 times a day. Then, like I said in the beginning, my time frame, 9:30 to 11:30, 12, something like that, I can say, hey, that happens, 4 or 5 times in the morning or something like that. So just kind of a quick breakdown of that one signal. We'll use this for the example. These are my 3 trades this morning, 2 good, and man, I am regretting closing that breakout trade, but that one stings a little bit, I'll be honest to say. But anyways, my second trade of the day, and I've talked about this on here, so if you've watched this is what I like to call, a simple delta divergence play. We can see we have these sellers hitting that market down here. That's what those red lines are. Get that nice 3 candle, break that descending trend line, end up getting a scalp, sell that pretty much right back into where we had some of those buyers before. So if I was setting up this system, I would say, okay, that signal makes sense to me. Why does it make sense to me? Well, I like to see the delta. I like to see traders squeezed. I like to see the price action. It fits in my window. It fits my style of trading. That scalping, I'm looking, this was just 1 point. We were in a 7 point range. I don't try to get more than a few percentages of a range, if that makes sense. But that is my style of trading. So I would go down to my notes. I would explain this in as much detail as I could. I'm a very visual person. One of these days, I'll bring out my actual book. I have a whole binder just filled with pictures that I'm like, hey, I don't know what's going on. Or, in a bearish market or something like that, I can go back and reference. But we're talking about more of that in a second. So, number one is to stick to a signal. Whatever signal it is, something that makes sense to you, something that when you look at the charts, it's like, boom, that's my signal. That's what I want. So that's number one. And then number two is you need to go back. This, remember, we're slowly building on here. You need to go back and start marking out when these trades occurred. Is the signal you're looking at, is that a realistic signal? So what we like to have our traders do is we go back and, NinjaTrader has umpteen different drawing tools. You can circle, rectangle, whatever you want, is go back and really just start to identify those. Why? Well, you want to make sure that, one, in the current market condition, that it works. Two, you should be going back and back testing to say, hey, has this worked for X amount of time? Is it just a one-off event type of thing? And three, you can start to build, hopefully build that confidence that, hey, this signal happens, this signal works. You can start to get a rough idea of, when you're entering into these trades, if they're going to work. So for an example, we'll use my trade I took this morning. This is what I like to call a 3 candle delta divergence setup right here. So I could say, all right, perfect world. And actually, I did get a decent entry on there. Perfect world. I want to enter in at the close of that at 72.75, 72.75. So we can come up here, and this is when we start to figure out our stop loss and take profit levels. And what I tell people is, if you're going to do this, be realistic. You're not going to enter in here and say, oh, price ran all the way up there to 43.90. I'm going to stick in there. If you're a scalper, you're probably not riding that much. So what I would say is, all right, I enter in here at 72, call it 73 with some slippage. And a realistic area for me to maybe get out is maybe I want to target the top of this resistance right here. That would be maybe a realistic target right there for a scalper or something like that. So you could say, hey, I get in at 73. I want to get out at, call it 76. So I'm going to jot down, hey, this trade would have yielded me 3 points. And in a perfect world, I wouldn't really need much of a stop loss on this trade. Obviously, you should be trading with one. But in terms of keeping data of the size of stop loss that you needed, you really didn't need a stop loss in here. You entered, boom. Ideally, it would have been a winner. So I'd go and I'd jot that down, and I'd go back and I would do that for a month, 6 months, a year, whatever it is. You can't have too much data. And I would make sure I take very, very, very detailed notes. There's no reason to just bang this out in a weekend. Yeah, you might feel good. Hey, I'm going to get a trade next week or whatever, but is not going to do you any good because you just rush through it. So take good notes, really, really focus on that. And if you want to take it a step further, is you can focus on just your time frame. So let's say I only trade from 9:30. This is a regular trading hours chart, so it doesn't show anything pre-market. So say 9:30 to just today, I traded till about 10:30. So I would only look for trades between that window. Why? Well, if I'm not trading after 10:30, who cares what happens after 10:30? It's not going to help me out. So I'd go back and I would look at all that information, and then I can compile that information and say, hey, out of 300 trades, 17 would have been a loser, 45 would have been maybe a break-even trade or something. It went nowhere, and then 100 or whatever were winners. So you could go back down and you say, hey, I've got all this positive information, I've got this positive data. Then that pretty much brings you to number three. Number three is the sim trade. I know some people are not a big fan of the sim trade. I think it's kind of one of those things where you practice how you play. If you take it, kind of seriously with the sim trade, then hopefully, to a certain degree, that will transition over into, your real trading. Maybe you can trade the MES. We'll talk about that more in just a second. But
Patrick,
yeah.
real quick, before we get into sim trading, I do want to go back to the analysis, because I think there's something, that you mentioned, which I think is really key, which is the work that's involved in it, right? This is probably one of the most crucial parts of developing a trading plan, which is analyzing what could have happened in the past, right? It's the back testing part of it.
Oh, yeah.
And so when you do this, when you're looking at this and you're looking for the signals that you would have entered in and then exited out of, are you also looking at where the market could have gone, right? So today is a bad example, right? Because today we know what happened, or we will talk about what's happened so far. But let's say you're scalping and you're looking, your exit is, let's say, 10 ticks, right? It's a tick-based exit.
Yeah.
Are you also looking to see, you know what, the market continued past my 10 tick target and it went for another X number of ticks? And do you do that kind of analysis to say, well, on average, when I did have a winning trade, I was happy with the trade, but I could have been happier by X number of ticks on average? Or is that something that's something that you want to do maybe after you get your feet wet, or your toes wet with actual sim trading or even live trading?
Yeah, no, I think that's a really good question. Now, it's something that I kind of disagree with that, and let me kind of explain my point. So we'll just look at this chart right here. If I think I'm going to enter in right here, this is what, 11:27 Eastern, and I think price is going to run right up here. So let's say I get in, call it 4,400. I think it's going to run to, call it 42 to make things simple. So I think it's going to win 2 points. I look at that and I'd say, okay, it ran up to 2 points. Perfect. I myself am personally not so worried about what happens after the trade, because when I entered into that trade, I didn't even think about what could be happening. I had a target, it hit my target, I was correct, it goes down for a win. I've tried to test out leaving in like a runner or things like that, and for me it's nothing that has really ever worked out. Again, what works for me might not work for you, vice versa type of thing. But I look at it as, I was right, I need to focus on being right more often, and I would rather be right more often than be wrong more often, but have maybe 1 or 2 more trades that yield a bigger result. So my style of trading, I'm kind of more of a quantity person. I'm looking at taking, maybe 2, 3, 4, 5, 6, depending on the market in the day, looking at taking a few of these trades throughout the day. If the proper conditions present themselves, then looking at just getting one and having one big home run, maybe once a week or something like that. Now, there's nothing wrong with that. Some people will say that the way that I'm looking at it is completely wrong, and that's fine. But I like to look at it as, I hit my target, that's what I'm focused on. I want to do that 5 more times today.
Right. There's always another setup that will present itself at some point in the future. So you're looking for that.
Yeah. So kind of like we talked about on our last webinar, kind of the whole rinse and repeat thing. you know, and then just try to do it again. So no, that's a good question. Excuse me. So we're on to the sim trade here. Really, you would do the same exact thing that you did in number two, identifying those, but instead of just simply circling them or and writing notes, you're going to ideally sim trade, but you're going to follow that same framework that you kind of established in number two, or when you're simply going back and back testing. Same exact thing. You're going to enter in the trade. You're going to have that target, whether it is a price action target, kind of like what I just mentioned right here, or kind of what I think Tom was alluding to. You know, it's kind of an average target. I think he said 10 ticks or something like that. Whatever your target is, that's what you're going to stick to. Now, what you're going to find out is, you know, maybe you need a tweak here, a tweak there. And what a lot of people do is they make that tweak while they're sim trading instead of just sim trading the way that they were supposed to in number two. And then if it doesn't work out, then you go back, you make that tweak in number two, then you go back and sim trade again, if that makes sense. So I like to look at it as kind of a controlled experiment here. You know, you have to have something that says, hey, this is working, this is not working, something that you can go back and kind of reference. So that's how I like to deal with the sim trading. And that is number three. Then number four is pretty much very similar to number three. You know, you want to, once you have that successful sim trade trading setup, I like to then extend it for a month or two. You know, you have something that works. Now it's time to make sure that it works for more than just a week or 2 weeks or whatever that period was. Go back, look at that for a month, 2 months, whatever it is that you need. Hopefully, you can get some ranging conditions in there. You should be taking good notes of that. Hopefully, you can get some bearish conditions, bullish conditions. You know, maybe Jay Powell will throw in a zinger or something like that and have the markets moving, and you can keep track of that as well, how that system worked. Once you get done with number four, that is when I would then take it to, you know, whether it is a full size contract like the ES or now the full size contract, or, you know, back to like an MES. I personally think the MES should be a stepping stone. I love the MES. If I want to test out something new, I'm going to the MES to do it. You know, it saves money, you know, it's not that big of a deal. It moves 9 times out of 10, just like the ES to a certain degree. And it's a great tool to one, test things out or get started in some sort of trading. So to kind of put section two into a nutshell here is one, we want to pick one signal. You know, you should have at least an idea of that signal from section one. We want to pick one signal. We want to stick with that one signal. If you prove to yourself, whether it's in section 2, 3, whatever it is, or part 2, 3, I should say, you know, then you can go back and change that. But don't keep changing on the fly. You know, give things at least enough time to kind of work themselves out. Number two, like I showed before, I can zoom back down here. I was trying to figure out what was going on, but what we can see here is, you know, go back, identify those trades, take those notes, and be realistic about it. You know, I would have never said, hey, I'm going to enter in here and I'm riding this all the way to 4,400. You know, that's ludicrous. Don't get me wrong. I wish that would have worked, kind of like I wish my breakout would have worked this morning. But that's just not the way I trade, you know? So it's unfortunate or whatever. But anyways, go back, hit those notes, hit those signals, you know, go back and look at a good period of time so you have that data to stand on. And it's not only important just from like a learning standpoint. What you end up finding is a lot of people then start to gain some confidence in their trading. You know, whether sometimes you have those people that are kind of, you know, button shy. Oh, I want to enter here. You know, you can look back and say, well, I just did 6 months worth of work and it proves that, you know, 75% of the time this signal works or whatever, you know, your percentage is. No guarantees. But anyways, you can go back, you can look at that information. Hopefully that helps out with some of that confidence as well. From there, once you have proven to yourself that that works, that you have an idea here, then it's time to test it. You sim test it. Once you have a successful sim test, you extend that a little bit. Then that's when you go and you look at your MES or ES or MNQ or M2K or whatever it is, you know, our micro Russell is. You know, there's a lot of micros out there. I think you guys have a Bitcoin contract now, right?
Right.
Micro.
So CME has a micro Bitcoin,
Yeah.
and there's actually a nano Bitcoin, which is from the Coinbase Derivatives Exchange as well. So yeah, there are certainly ways for new traders to trade Bitcoin and Ethereum on
Okay.
a smaller scale with the nanos.
Yeah, perfect example. You can go back there. You have a whole slew of options to kind of slowly work your way up to that full size contract, and then from there, it's just keeping track of your information and kind of continuing on.
So Patrick, one thing I do want to highlight is in the NinjaTrader platform software, we do have the ability to look at our trades in a simulated account. We have the trade performance window, and that allows us to break down different ways your simulated trades. If you want to look at a summary, if you want to look at the actual trades or just the executions, the orders, you can look at all of that in different ways. All that data is available and then you could, generate that report and you could do that analysis. So it might be a little quicker than going back into the chart and looking where you executed and tracking it. You can actually use the trade performance window in NinjaTrader to speed that up, so to speak.
Yeah, no, I think it's a great tool, especially, you can go back to see all those win losses. It compiles everything. I think you guys do it in like a weekly, monthly, and you have a few different
Yep.
increments. I'm a little old school. I still like the pen and paper. It's just kind of what resonates with me. Unfortunately, sometimes it makes things a little harder, but yeah, like Tom said, there's multiple kind of tools that NinjaTrader offers that you can definitely kind of use, to complement some of the things we're talking about today.
Sure.
So that is what I like to call, kind of that building phase. It's all about kind of building good information, and then really moving on from there. I like to call it, just time to kind of put everything together, and to take a step back here. One thing that I think a lot of people really don't focus on is kind of leading up to that trading time. So just to kind of put an example for you, I personally am very kind of routine or regimented when it comes to my trading. I like to wake up kind of similar time, get a little workout in. We go for a walk in the morning. Then I come. It's time to kind of look at the charts. I work on my game plan for the day, and then I start to do, kind of the streams and trading and stuff like that. So I think that is something that a lot of people should probably focus on. And I think it's the same thing as if, let's say, you're working a 9 to 5 right now. Say you're an accountant or whatever you do. I'm sure you probably wake up at a similar time, maybe eat breakfast at a similar time. Maybe you have a morning huddle or a meeting or something like that. You're trying to kind of turn your trading into a business, because if we go all the way back, one of your goals was probably to do this full time. You're not going to just kind of pick and choose, hey, today I'm trading, tomorrow I'm not. You need to be, at least to a certain degree, regimented in how you're doing that, so you can better execute that plan, especially if you do have, you have to spend a half an hour planning out your trades or looking at the news and stuff like that in the morning. So that is kind of number one when it comes to putting everything together. Number two, kind of 2 and 3 here. I'm kind of getting my sheet here all kind of spread around. But number 2 and 3, at this point, you really should have documented sim results. You should know when to enter, where to enter, when to exit, all that stuff. And you can kind of start to build on, do you want to take that one contract to maybe 5 contracts or 10 or 15? Because hopefully at this point, you have an idea of how you want to trade. Now it's time to really, for lack of better words, ideally capitalize on that system, on that style, and hopefully kind of push it, so no guarantees, hopefully get those results that you want. One thing that I would strongly recommend, this isn't a term that I coined or anything like that, but is to create a playbook. I think creating a playbook, once you have an idea on that one trade, you can make a playbook for a bearish situation. You can make a playbook. And when I say situations, I'm talking about market types. Whether, are we selling off? Are we ranging? Is it a very volatile kind of news driven market or situation, you can have these different playbooks, and that's when you can kind of make those tweaks. Hey, maybe I should only trade 2 contracts during a Fed week, or during earnings season, maybe I should drop down to 1 contract or trade 5 MES contracts. How can you kind of better utilize all that work you put in the past to then ideally, make your current trading better? I like to call it a playbook. Again, mainly because I'm kind of old school. I actually do have a playbook when it comes to those things. It's just full of pictures. I have pictures, lots of examples and descriptions at the bottom, kind of saying, hey, you should be doing this, you shouldn't be doing that type of thing. So that is really putting it together. Is your playbook. You should have, some sort of kind of regimented routine so you can better, kind of establish those items. And then, you should really have, obviously those documented results before you really get to, this section to say.
Now, Patrick, well, you've got a playbook, you've done the research, you've done the sim testing, you're ready to sit down and actually commit to trading a live account. You've got your playbook, and just for expectation's sake, you have to be prepared that your first trade might not be a winner, right? And but you've accounted for that because you have a playbook, and it's you have your protective stops, or however you handle that. We always advise to put in stops.
Oh, yeah.
But let's say over time you find that your analysis of the back testing isn't the results that you're seeing in live trading isn't meeting what you expected or what you saw in the analysis, right? You've looked at, let's say, a year's worth of intraday data. It took you, I don't know how many weeks to put that together. You've done the thorough analysis, and you have these expectations. And then for whatever reason, the market decides, the expectations aren't met. At what point would you, Patrick, say time to reevaluate, whether it's reevaluating the signals or reevaluating your risk, how you manage risk, reevaluate when you're going into, when do you put on a full position versus a half position, or a fraction thereof? How long do you give yourself as a new trader? If you were to go back to when you were trading new, how long would you give yourself to say, maybe it's time to reevaluate and see if there's something else that could be better suited for me?
So I don't have an exact time frame. Now that you kind of mention it, probably I might want to, but when I look at it, let's say I have 4 red days in a row. So it's like, okay, something's clearly not working here. And it's one of those things where, one, hopefully I'm keeping good notes currently and previously, and I can go say, is it simply, the market, are we going to war, or is something crazy just come up where, everyone's kind of on edge, the trading's different. And if it is, then I need to make a plan to kind of address that. But if you have consistency in terms of, losing, let's say maybe it's 6 months, and you've gone through bullish conditions, bearish, ranging, news, all that stuff, and you're still having losing trades, then you might want to pump the brakes, and maybe don't wait 6 months, whatever time frame works for you. Then you might want to go back and say, hey, regardless of the market conditions, nothing's working. I might want to go back to kind of that step 1, look at a new signal, and then move on from there. But what a lot of people I don't think they do is, one, they don't analyze those trades enough. You should be doing it on a daily basis. Just to get off topic here, the last 3 questions on my sheet: what did I do right? What did I do wrong? And how did I fix it? Those are the last 3 things that I look at every day. And that's something that you should be as well. So then hopefully, you don't have to go 6 months to figure that out. You can say, oh, well, Jay Powell dropped a bomb on us. We're cutting rates 5% tomorrow or something like that. That screwed things up, for the rest of the month, something like that. So you should be keeping notes of when you should be changing. You should also be keeping notes of, what's working and what's not working. And I really think it just boils down to you as a person. Are you frustrated? Are you upset? Is things not working out? Take a step back, reevaluate, and then maybe you have to change your system around a little bit. I think it's kind of different for everyone, unfortunately.
And what I like, Patrick, about what you said is you mentioned or your time frame 6 months is what you threw out there. It could be any time frame, but you went through bullish, bearish, news events, kind of this environment. What kind of environment are we in? And that environment could be different things, right? It could be market specific, it could be market general. But that's what I like about your style, which is a shorter time frame. You don't have to focus on that exclusively. That's not going to be as much of an effect as would be for maybe a swing trader or an investor, right? If you take a signal, and you get the bias wrong because you think it's bearish and it's actually bullish, or you ignore the fact that we're in an inflationary trend, and when you were analyzing there was no inflation, something like that. Well, the investor, it takes a while for that to show, but it's not something you can easily pivot from. Whereas on an intraday basis, well, it's nice to know that, but really you're looking for the minefields you come day to day. Economic news, unplanned news, something you might have missed, right? So it's kind of different. You also have to go back to your style of trading to determine, how to reevaluate your system.
And to take that, because you mentioned something in there talking about, kind of the market environment. And if we can just show my chart here real quick, I think there's something that a lot of people don't realize is like today. Today is what I like to call a melt up day. And for the most part, depending on your stop loss, you could kind of buy anywhere today and probably make a few bucks type of thing. And what I think a lot of people don't understand is, they're going to get in, say today, for an example, and say, hey, I took, where's a breakout I can take real quick? Just say, hey, I took this and I had a 10-point stop and I ended up gaining 30 points. This is the greatest signal ever. But what they really didn't realize is they didn't realize the current market conditions that they were in. 9 times out of 10 in, say, normal market conditions where we aren't melting up and melting down, every other day, that trade is going to get just obliterated. But today it looks like it's great because you're really only focusing on that candle setup and the results from one trade, then rather than kind of looking at the whole picture. And I think that's something that stumps a lot of people, because they're like, hey, for 2 months, this is what I did. I took the breakout trade. It just produced tons of results, which, yeah, it's great during that melt up phase, or, whether it's a news phase or whatever like that. So I would definitely figure out those kind of market conditions, because those market conditions play so much more of a factor into trading than people talk about. And the reason why it's not talked about is because market conditions aren't sexy to talk about. We could sit on here and talk about market conditions for hours, but from a scalping standpoint, everyone wants to talk about a signal, an entry, an exit, what's my average win loss, stuff like that, when in reality you need to figure out kind of that market direction, market condition type of thing, kind of the whole, look at the forest, not the individual tree type of thing. So I wanted to highlight on that real quick, because I think that is a really important topic. And that really goes, let's see, can I throw a daily chart on here real quick? Yeah. That really goes, if we look at our daily charts where, we have kind of some of these meltdowns, well, a lot of this, whether you're a news trader or not, a lot of this is related to some sort of market condition, or, kind of this, we melt up. So really kind of figure out what those market conditions are, because they end up playing a big factor. And I think it's a bigger factor than a lot of people will admit or want to admit.
Yeah, and to your point, the market environment with respect to, let's say, inflation, it's not just about what the inflation, or what the Fed funds rate is now. Yeah. There is so much more to it. It's are we in a raising rates or cutting rates or plateau rates environment? How far away are we from the next announcement? What's expected versus what actually happens? All of that factors in. You can't really compare October 2023 to October, let's say 2015, or October 2020, right? Yeah. And you can, but it won't be, you can't expect the same results.
Yeah. The charts may look similar, but the reason why they're moving could be, completely different in terms of, kind of the macro, micro, economics and stuff like that of what's really going on behind the scenes. So I do want to summarize this. I know we've got a few moments left, but to really kind of just break things down, in a few points, really need to identify those goals. How long are you going to work on them? What really resonates with you? After that, you really need to find education, that makes sense to you, whether it's, a Guerrilla Futures thing or it's a YouTube thing or whatever. I tell people all the time, if Guerrilla Futures doesn't make sense to you, please don't waste your time on it. Find something that really makes sense to you, because that's ideally where you're going to, get the results that you hopefully want. From there, really focus on your one signal. Go back and really spend the time and effort. This isn't an overnight thing. You can go and look at a million different YouTube videos that say, make $1,000 every day or something stupid like that. It's going to take time to get this going. Really pay attention to those market conditions, really kind of back test that information, so you know what's going on. And then from there, work on that daily routine so you can, when you hit the charts, good frame of mind, what to do. And then, kind of rinse and repeat, and then just wake up and do it every day for the next 20 years, or, whatever your goal is. So that's kind of, if we had to summarize this in a nutshell, that's really kind of the few main steps. If you have any questions, I do have a sheet as well that kind of breaks this down a little bit more. So if anyone wants that, more than welcome to share that. We'll put that on the website here in the coming days, or you're more than welcome to shoot me an email. That is at guerrillafutures.com or guerrillafutures@guerrillafutures. And then to kind of plug myself a little bit more, here in the coming weeks, we are going to be doing, as you can see behind me, doing kind of the ultimate trading build out here as we kind of build out this new office. So if you want to pay attention to that, you're more than welcome to follow on YouTube. We're going to be posting that stuff as well. So hopefully that helped some people out. Like I always say, if you have any questions, more than welcome to shoot me a message, whatever it is that floats your boat, and see what we can do to get you squared away.
Awesome, Patrick. Thanks so much for joining us again. It's always a treat to have you on here and talk.
It's a blast to be back.
Oh, good. Well, good. Thanks. And we'll do this again in the not too near, or not too distant, I should say, future, hopefully sooner than later. But want to thank all the viewers for coming as well, and watching our show. We will be back here at the end of the day. Jim Cagnina will wrap up the day in a nice, pretty bow, 3:15 at bars closing. In the meantime, have a great trading day.